So here we do have the questions, objectives and essay questions. Now let's solve those and let's get some idea how these works in examination point of view. Okay. Now roles of budgets and budgeting process. Now all of the following are advantages of use of budgets in a management control system, except that budgets force management planning, provide performance criteria, promote communication coordination within the organization, limit unauthorized expenditures. Now, sir, here he specifically told unauthorized. So this is not the thing, no, sir. Yes or no? Because they will be authorizing and they will be verifying each and every payment what we are going to do. Understood? They should give you the approval, sir. Okay. Then only it is a authorized payment from the strategic level of management. Understood? That's what. So what is the option, sir? D in this case.
So basically, budgets don't do that now, sir. Budgets only limit.
Never.
Yeah. Okay.
Never. 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 Because it is simple, sir. The reason is that's what the expenditure. What even though you have prepared the budget, the strategic level of management should approve that. Understood? Then only you will be getting an authority to spend the amount. Okay. But here is specifically told unauthorized. Then how come it is an option? No. Simple. Okay.
Okay. Okay, sir.
Next. In the budgeting and planning process for a firm, which one of the following should be completed first? Now, sir, just by looking at the options, don't come to conclusion. Here he told budgeting and planning. Okay. So if it is budgeting, then your answer is sales budget. So read the options properly. Okay. So what are the options? Sales budget, financial budget, cost management plan, strategic plan. Answer is strategic plan. Why? Because first and foremost thing you need to have is plan. Then only based on the plan, you will be spending the amount. No, sir, you will be allocating the resources to each and every department. Yes or no? That's what. So what is answer? D, strategic plan. Clear? A manufacturer's factory manager had lost her patients. 6 months ago, she appointed a team from the production and service departments to finalize the allocation of costs and setting of standards. Okay, for what, sir? She particularly appointed the team for production and service departments to finalize the allocation of costs and setting of standards. That means they are outsourcing the planning thing, no, sir? Yes. Now, they were still feuding, so she hired a large consulting firm to resolve the matter. That's what she is not doing. Her team is not doing. Her members in the organization are not doing, sir. They hired a team. All of the following are potential consequences of having the standard set by the consulting firm, except, let's see. The consulting firm may not fully understand the manufacturer's manufacturing process, resulting in suboptimal performance. Now, can I say this? Let's see. This is the first option. Let's discuss. The second one, employees could react negatively since they did not participate in setting the standards. We can also consider, but let's see. We don't have more options. We have not seen the more options left. Next, he told except that, sir. Okay, so the next one, there could be dissatisfaction if the standards contain costs that are not controllable by the unit held responsible. Now, that's what, sir. If this is the organization, if the employees of our organization says that we cannot control the costs, she hired the consulting firm because they may cut the costs, while our employees are saying that it's not, we can't do that bulk. Understood? That's what. And the last one is the standards may appear to lack management support. Now, out of these four, which one you think and why? Can you, sir?
D only, sir, because the management appointed them, so obviously they'll have the support.
Perfect. Perfect. So that's what, sir. The standard may appear to lack. That means the budget is not tight. Okay, and what is the who appointed? Management support. So basically, the first three options, what they told was correct if they don't use the term called except. Understood? That's next. Which one of the following is not a advantage of participatory budgeting process? Participatory budgeting process. He told what, sir? Not an advantage. That is disadvantage. Let's see. Coordination between departments, communication between departments. Sir, if there is a participatory budgeting, these two will definitely happen. Yes or no? Yes. And the third one is goal congruence. Of course, yes. When there is a participation, when there is a coordination, when there is communication, everyone is traveling towards the same goal. Yes. So that is not the option. Then what is option D, sir? Control of uncertainties. No. Why? Sir, it may be participative, it may be authoritative. You cannot control the uncertainties. Understood? So what is option, sir? Any doubts?
No, sir.
Next. Yogendra, any doubts?
No, sir.
Yeah, thanks. Which one of the following best describes the role of top management in the budgeting process? Top management, let's see, should be involved only in the approval process? No, sir, they need to get the information. They need to get the information from tactical and operational. Then they will listen to each and everything, and then they will decide, sir. They are not only there for approval. Okay, they are even participating sometimes as well. Okay, so that's not the option. Next, lacks the detailed knowledge of the daily operations and should limit their involvement. No, never. Sir, maybe detailed knowledge of daily operations was correct, because they will not make sure that daily the sales are happening, daily the purchases are happening. They won't look at that, sir. But he told something, should limit their involvement, which is wrong. Why will they, sir? They are the top level management. They have a complete authority. Understood? So that's not the option. Next, needs to be involved, including using the budget process to communicate goals. Let's hold this option. Next, needs to separate the budgeting process and the business planning process into two separate processes. No, sir, if you have a planning, then only you will be getting to budget. So these are interlinked process, sir. These are continuity process, not two separate ways or process. Understood? So D is also wrong. So what is the C option? Needs to be involved. Yes, they will be involved, including using the budget process. Yes, they can include whatever the things they want. They can set the targets, they can set the standards, and they will be communicating this to the remaining two levels. Understood? So the option is C. Any doubts? In developing the budget for the next year, which one of the following approaches would produce the greatest amount of positive motivation and goal congruence? So, while preparing the budget for the next year, what is the best way to motivate the employees, and I mean, we need to make sure that they are not deviating from the goals. Okay, let's see. Permit the divisional manager to develop the goal for the division that is manager's view will generate the greatest amount of profits. Now, sir, permitting the divisional manager is fine. And one more thing, sir, he is telling goal congruence. Now, goal congruence is something where each and everyone should be communicated, where each and everyone should have awareness. Yes or no? Yes. Now, the most important thing is, first they need to know what the management wants to achieve. That is the goal. Okay. See, individual departments has their own goals, but that's not the issue here. What is the goal given by the management? What is the goal they are carrying by the management is what matters. Understood? So we need to consider that goal, not individual goals. But what is telling here, permit the divisional manager to develop the goal for the division that in the manager's view will generate the greatest amounts of profits. Now here it is becoming participative, which is also fine, sir. But he's telling individual goals. Put your own targets and write the, put your own targets and perform. Now the production department will be producing 1,000 units. The sales department can only sell 500. What is the purpose of producing more 500 units? Understood? That's what. Next, have senior management develop the overall goals and permit the divisional managers to determine how these goals will be met. Now, means what, sir? Here the senior management is developing overall the goals and they are discussing with the other people, the other levels, how can we reach? Okay, they are asking the options. Okay, that is the second point. Next, third, having the divisional and senior management jointly develop goals and the objectives while constructing the cooperation overall plan of operation. Means what, sir? Each and every division has each and every division's manager and the senior manager has their own individual objectives. That's what, sir. Goals and objectives while constructing the corporation's overall plan of operation. Now, sir, each and everyone has their goal. Now, someone wants to produce 500 units and the sales department wants to sell 1,000 units. Now there is a difference, right? There is a variance involving in this between these two departments. Yes or no? Yes. That's what. So rather than using all the three options, what is this fourth option? Let's see. Have the divisional and senior management jointly develop goals and the divisional management develop the implementation plan. Sir, strategic, sir, the best example is Ambani is setting the goal. Ambani is setting the standard. He is not working in the factory now. Sir. He is making some other, the next levels to work for him. Yes or no? Yes. So out of three, which one is better? Out of four, which one is better? The last one. Why? Because they are completely participating in the budget. All the other levels are participating in the budget. But when it comes to implementation, only tactical and operational are involved. Understood? No strategics. Till the strategic will help you till you set the goal and till they approve the target, the budget. Understood? That's what. So which one is the best option, sir? D. Any doubts?
Sir,
No,
no
sir.
doubt here, sir. Just in
Sir,
question
can you
number-
please hide the this answer part so it would be easy for us to find what is the correct answer?
Sure. Now, is it still visible?
Yes, sir.
Fine, or shall I zoom more?
No, it is fine.
Yeah, sure.
Excuse me, sir.
Yeah. Tell me, Shiv.
Yeah. In question number one, I just have to clarify this. So, can we say that one of the inherent limitations of having a budget is that it does not limit unauthorized expenditure?
I didn't get you. Acha, the first question.
Yeah. I just have to clarify that. Can we say that limiting unauthorized expenditure is basically like a limitation of a budget because it does not limit unauthorized expenditure, sir?
Of course, yes, correct.
Because if an organization can limit unauthorized expenditure, it is an advantage for the organization.
Yes,
So budget cannot do that. So that is like a limitation of the budget, right?
yes.
Okay.
Yeah. Because literally it's like you are, what we say, you are tying the hands. Okay.
Yes.
Yeah, thanks. Now, the seventh one. Let's see the seventh one, sir. Which one of the following statement concerning approaches for the budget development process is correct? Let's see. He's telling what, sir? Concerning approaches for the budget development process. Okay. So what are the things we need to consider while developing the budget? Okay. The first one, the top-down approach to the budgeting will ensure adherence to strategic organizational goals. Now, what he's telling, sir? Top-down approach. There is a vertical or horizontal communication, sir. Vertical communication is happening. Okay. And he's telling another thing, sir. What? Adherence to the strategic organizational goals. Okay. So, see, budget development process is not only for strategic levels or the strategic plan. It includes operational and tactical and strategic. Okay, so that's not the answer, I guess. Next, let's see. To prevent the ambiguity, once departmental budget goals have been developed, they should remain fixed even if the sales forecast upon which they are based proves to be wrong in the middle of fiscal year. Means what, sir? Means what is trying to tell?
So budgets are basically rigid, is what they're saying, sir. Because even if
Correct.
the sales forecast change, you can't change the budget in the middle.
Correct. That's what, sir. Because fixed. Even if the sales forecast upon, that's what, sir, fixed budgeting. Okay, next. With the information technology available, the role of budgets as an organizational communication device has a decline. Means what, sir? Sir, informational technology is nothing but the updation. Okay, the updation in the business process, we can say, or the updation in what we say, this communications like mails, all those things. But this is not what, sir? This is not related to budgeting development process. No. Yes, that's what this is related to. The options we have for communicating the budget. Okay, next. Since the department managers have the most detailed knowledge about organizational operations, they should use this information as the building blocks of the operating budget. Okay, means, sir, the managers have the knowledge of what they are doing in the future, or what they are doing at present, or what they want to achieve. Okay, so this helps the organization that they will be. See, that's what, sir. If you want to write the examination, first you need to learn what are the contents we do have. Yes or no? Yes. That's what. Okay. So, which is the best option out of these three, sir? Four. The first one is no. Because it told what, sir? Budget development process. Okay. So, the first one is wrong. The second one, ambiguity. So, it's a confusion. No. If there is a confused goals, how come the managers will reach their target? No. The third one is information and technology. No. And the fourth one is what, sir?
Fourth one is correct.
Detailed knowledge. Correct. So what is the correct answer? Okay. Next. Budgeting and standard costs. Okay. Let's see. A corporation is developing standards for the next year. Currently, one of the material components is being purchased for 36.45 per unit. Okay. It is expected that the components cost will increase by approximately 10% next year, and that the price could range from 38.75 to 44.18 per unit, depending on the quantity purchased. If you are purchasing bulk, you will be giving less price. I mean, for the low price. If you are purchasing less, you will be they will be selling for more price. Okay. Now, the appropriate standard for the material component for the next year should be set at the, let's see. So, while calculating the standard for the materials or the target, the budgets for materials, what are the things we need to consider? Let's see. Current actual cost plus the forecasted 10% price increase. We don't know, sir. Because if you do that, the customers may lose you. I mean, you may lose customers. Sorry, my mistake. You may lose customers. Understood? Because you are, see, the supplier is giving you for more amount. That means you are going to increase the price. Means the customers will not show any interest to purchase your product. Okay. The next one, lowest purchase price in the anticipated range to keep pressure on purchasing to always buy in the lowest price range. Means what, sir? He's telling lowest purchase price. Okay. So basically, I told you that, right? Holding cost, ordering costs, all those things, if you remember, that's what he's telling. So why can't you, rather than keeping the pressure at that time, why can't you purchase right now and keep the goods with you? So it's we don't know about other details. So we can't conclude on this option. Okay. The next one, highest price is anticipated range. range to ensure that there are only favorable purchase price variances. That means what, sir? Even though the price is high, if you reach your sales target, you may recover the price what you have spent, the extra amount, and you will be in a favorable purchase price variance. Can you decide that, sir, without implementing or without applying or without purchasing the goods yet? No. That's what. Next, price agreed upon the purchasing manager and the appropriate level of company management. Means what, sir? Purchasing manager told what? At the level of price what the organization wants, he had already agreed. So it's better to accept the price, rather than accepting the price, it's better to agree to the price before itself with the supplier. Understood? Why? Even though if you agree now, in future also if the price increases, that will not affect you. Understood? That's what. So out of 4, which one is better, sir? D. Understood? So which is the best option, sir?
D.
D.
So don't select from the lowest price and don't select from the highest price. Just go with what the manager says. That's what.
Exactly. So we have already agreed, no. So the fluctuation will not affect us. After performing a thorough study of a firm's operations, an independent consultant determined that the firm's labor standards were probably too tight. That means there is no slack, sir. Okay. Now, which one of the following facts would be inconsistent with the consultant's conclusion? Inconsistent, he told inconsistent, sir. That means not agreed with the consultant's conclusion. Let's see. A review of performance reports revealed the presence of many unfavorable efficiency variances. Sir, when there are many unfavorable efficiency variances, yes, we can say it is tight, but he told inconsistent. This will happen regularly. So it's a consistent. Okay. Let's say, for example, our labor can achieve 100 units in 1 month, sir. That means he can produce 100 units in 1 month. Okay. That doesn't mean you are setting the standard of 150 because here the efficiencies matters. Yes, that's what, sir. So basically what's happening, it is giving you it may or may not give you the favorable things here. Why? Because you are setting the standard. The utmost thing he may reach was 110. Okay. So 100 is something where he can achieve. Okay. But he told inconsistent. This will happen regularly. So you can't opt this option. Okay. Next. The firm's budgeting process was well defined based on bottom-up philosophy. Now, what do you mean by bottom-up philosophy? It is a participative budgeting. Yes. Let's see. Next. Management noted that minimal incentive bonuses have been paid in recent periods. That's what, sir. Again, this is also consistent thing. Why, sir? If you not get paid, that means you will lose interest, no, sir. You will be losing the interest on your work. So this is also a regular thing what happens in the organization. The first one is the efficiency, you're putting more targets. The second one is incentives or the bonus you have given less. So based on the pay, he has no interest to work now. Okay. And the next one is production supervisors found several significant fluctuations in the manufacturing volume, with the short-term increase in output being followed by rapid sustained declines. Now he's telling the production has increased. The short-term increases on output. Okay. But the labor efficiencies, all those things are changing. Okay. So this is also normal. Why? He told rapid, sudden increase. Okay. And one more thing, sustained declines. If it increased, it is sustained to some point and it is decreasing. Sir, once it was increased, you need to maintain that standard. No, it is decreasing again. So this is also normal. Means what, sir? Basically, significant fluctuations are nothing but in manufacturing, the labor is not only responsible, sir. It may be because of material, it may be because of machinery breakdowns, all those things. Okay, but he asked about only labor efficiency. Now, which one is a better one? See, I promised that I will be completing the syllabus within 1 month. If I had not done, if I had not done that thing, that means this is inefficient from my side, no, sir. I have only set the target. I have only asked you for 1 month. If I am not completing, then it is a problem with from my end. Understood? So which options are very different compared to the inconsistent thing? Option B, based on bottom-up philosophy. Understood? Any doubts? Am I audible?
Yes, yes, no doubts.
Yeah. Next. When compared to, when compared with ideal standards, practical standards are produce lower per unit product costs. Sir, if you attain ideal standard, that means your per unit cost will decrease, sir. No. Next one. Result in a less desirable basis for the development of budgets. Now, is that desirable or less desirable, sir? Less desirable. Why? Because you are forcing that there should not be any breaks or all those things. Understood? That's what. Next. Incorporate very generous allowance for spoilage and workers' inefficiencies. No, sir, adopting the practical standards doesn't mean you have a right to waste the resources. Sir. Understood? You need to use the resources to the point, and how much efficiently you can use, you need to use that. And the last option is, let's see, serve as a better motivating target for manufacturing person. So compare it to all other options, option D is better, no, sir. Why? It encourages. Yes or
Yes,
no?
sir.
It is encouraging. Compare it to the practical, what we say, ideal, practical is encouraging. Understood? So what is option? What the answer, sir? Let's see. All of the following statements concerning standard costs are correct except the first one. Time and motion studies are often used to determine standards. Now, sir, what are time and motion studies? Nothing but you want to set up a standard. Now, based on the previous year's performance only, will you be setting the standards, sir? No, there are many factors influencing. So let's consider this option. Let's keep it on hold. We don't know the other options. Next, standard codes are usually set for 1 year, which is wrong. Why? Standard costs are set not only for 1 year, sir, but also the throughout the project or throughout the budgeting process. Next, standard costs can be used in costing inventory accounts. Can we, sir? Is telling inventory accounts, or you will be setting the standards. This is the sale. This is the purchases I want, or you will be just selling. I want this much of inventory. I don't know about rest. Understood? Will be using for this rather than this, sir. That means for rather than for inventory, you'll be using for that sales and purchases. So this D is not the correct answer. Next, D. Standard costs are usually stated in total, while budgeted costs are usually stated on per unit basis. Now, what is the correct option as per you? A or D?
A is not correct answer, I think, because time and motion studies used to determine standard code.
Correct. Then what is the correct answer? B. Okay. So, sir, simple. Standards. That's the reason why you will be calculating, no, sir. When you are calculating the standard costs as well, you will be saying actual quantity into actual price, standard quantity into standard price. All these things we do have while calculating material variances, efficiencies, all those things. Why, sir? Rather than calculating as a whole budgeted costs, if you set the standard, that means I want to sell the product for $10. This is a standard. You are setting the standard, you are setting the target. And one more thing, here you never told the revenue what you want to generate. This is not a budget, sir. Budget, when it comes to budget is the whole thing. Here it is about standard. Why? Because you can set the standard even for per unit as well. So out of these three, which one is better, sir? Option.
It means standard costs are usually set for 1 year. That is also correct.
No, sir. See. Our cost usually set for 1 year. Sir, basically what happens was, when you are dealing, sir, he is telling in general. Okay. When it comes to in general things, no, sir. You can set the standards for many years. Understood? That's what. Based on your standards for this year only, the next year standards will be deciding.
Okay.
Understood? So that's not the correct answer. Maybe if there is no option D like that, then it will be a correct answer. Why? Out of the three, that looks somewhat okay. Understood?
Okay.
Next. When it comes to that, each and everything is correct, sir. To be honest, except the third one, C1. A also correct to some extent. How come? You are preparing the standards based on the previous experiences. So time and motion was included, right? That's what.
Yes.
But out of 4, this looks better. A standard costing system is more or most often used by firm in conjunction with. Now, what do you mean by conjunction? Action or implementation. Okay, let's see. Management by objectives, target hurdle rates of return, participative management programs, flexible budgets. Now, sir, most of the organizations use which standards, sir? Ideal or practical?
Practical.
Exactly. When practical, you are using practical means you are considering the employee's opinion as well, right? You are considering the employees' opinions and their efficiencies, right? So that's what. Out of these three, management by objectives. No. Why? Sir, targets are something very different. But again, most often, which this statement suits for which option most is option D, flexible budgets. Why? You are considering their opinion, right? That's what. Okay, or their efficiency. See, participative management, he only told management programs. In management programs, no other things like budgeting or setting of plans, all those things. No. The next one, target rates of return. Okay, this is a sale I want to make. What is your opinion? No. Management by objectives. Only the management by objectives will be using standards, sir. No, each and every business will be using standards. Okay, but out of these 4, which one is correct? Flexible budgets. Why? Ideal standards are not at all attainable, and that is a myth, to be honest. But practical standards, when you want to do the standards as per practicality, you need to consider the management's efficiency, the employee's efficiency. Based on that, you will be putting the standards. Understood? Next. A manufacturer makes picture frames that require 1 sheet of glass each. Each sheet of glass comes from one larger sheet that is cut into 4 pieces. Normally, the company is able to produce 400 frames using 110 large sheets of glass, as there is a typical some breakage during the process. To improve its operation, the company has set its standards for glass material usage at 100 sheets of large glass. Okay, sir, basically what he's telling me is, with one large sheet, that means this was divided into 4. So how many pieces you can make, sir? 400. Because he told what, sir? Sorry, you have considered the 400 frames. That means how many, sir? 100. Yes or no? But what is happening using 110? That means this is what you want to, sir. This is what you want to use, but you are using 110, no? More, right? More, 10 more extra. Yes. To improve its operation, the company has set its standard for glass material usage at 100 sheets of large glass to manufacture 400 frames. Okay, just to round, what we say, round figure. Okay, so basically, what you are doing means it's 110, but you are considering only 100. Why? Rounding off to the nearest events. Okay, so which one of the following best describes the type of standards the company has set? Okay, let's see. It is an ideal standard because it would normally be attainable with some deviations. Sir, he told ideal standard. Is that attainable, sir? Ideal standards cannot never be attainable. Understood? Next. It is a currently attainable standard because it demands perfect implementation. Again, it demands perfect implementation means what, sir? See, you are using extra 10. That means it's a variance. You are using extra. So what is telling? It takes time for me to achieve this thing. What? 100. To produce these things within 100. But I am using 110. So this states that above situation? No. Next. It is a theoretical standard because it assumes that all equipment is in order and employees work as expected. Let's see. Next. It is a practical standard because it assumes all operating factors occur as expected. Sir, if it is a practical standard,
Wastage would be there.
sorry?
Wastage would be there, sir. If it is a practical
Exactly.
standard, wastage would be there.
Exactly. If it is a practical standard, there will be a spillage or wastage of resources. So that's not the option. Then what is C? Sir, what does the theoretical standard says?
In theory, this would be good. In theory, this would be optimal. But yeah.
Perfect. So because of what, sir? Because of the employees' unexpected work, or what we say that they are going to improve in the future, I am setting this. So theoretical standard because it assumes that all equipment is in order and employees work as expected. That's what. So that's the reason why I am using 110, but I am projecting only as 100. Understood? So what is the best option, sir? Any doubts?
Sir,
No,
then
sir.
what is the whole difference between an ideal standard and a theoretical standard?
Ideal standard is completely very difficult to reach, sir. Okay, whereas theoretical standards, there will be some adjustments in theoretical standards. If you set that, it will not become ideal, sir, but it will become more efficient or effective. Understood? The disadvantages what you have in theoretical standard, if you set those, it will be effective production. Whereas ideal standards are like there should be no break, or it's completely the mission should run 24/7. There are no
So that means the
wastages.
statement itself is wrong, no, sir. Because it says it is an ideal standard because it would normally be attainable with some deviations. But in ideal standard, we know that we can't allow any such deviation. So
Where
the
A.
yeah, the option itself is wrong. That is the wrong definition of
Yes,
an
yes,
ideal
that's what. It is a wrong thing. That's
standard.
what.
Okay.
So
Okay.
A option is completely out of the point.
Okay. Got it. Got it.
Yes. Yogendra, you're telling something?
No, sir.
Yeah. While an operating budget is a key element in planning and control, it is not likely to, let's see, establish a commitment of company resources, set out long range strategic concepts. Sorry, I guess. Okay, fine. Sorry, I missed. Yeah. While an operating budget is a key element in planning and control, it is not likely to, okay, establish a commitment of company resources, set out long-range strategic concepts, integrate organizational activities, provide subsidiary planning information. Now, he is specifically told what, sir? Operating budget, right? And he told not. So which is the best option? Operating budget never provide you the long run objectives. Understood? It is only for less than 1 year. Short term objectives. But it helps you to achieve the long term objectives. Understood? So compare it to, see, established commitment of a company resources is correct because you are using the resources efficiently each and every year, so it is correct. Integrate organizational activities, nothing but yes, sir. If you are, that's what, sir. If you integrate, that means if you use the organizational resources properly, it is a benefit for organization. Correct. Next, provide subsidiary planning information. Means what, sir? Only for the alternatives or only for the investments is this operating budget is used, sir? No. For each and everything we use operating budget. Yes, that's what. So what is the best option? Set out long range strategic concepts. Understood? Next. In preparing a corporate master budget, which one of the following is most likely to be prepared last? Which one, sir? Sales budget is the first budget what we'll be preparing. Production budget is what we will be preparing second, because if you fix for this, then only this will come out. The difference between these two is nothing but this one. So this
I think case budget.
So what is the option? Cash budget. Even if you remember the cash in the flow chart of the budgets,
In the chart, cash was the last.
will
Yes,
be
yes,
cash and capital budgets. Yes or no?
yes.
Next. The foundation of a profit plan is the, sir, from where you will be getting the foundation. That means the profit plan, from where you will be implementing. Capital budget? No. It's a forecast, sir. That means you are investing the capital for the future. So no, you are not thinking about this year. The second one is sales forecast. Yes. How come? In sales forecast, you are considering the selling price, you are considering the costs. Next, cost and expense budget. Sir, he told cost and expense budget. Sir, just by taking the expenditure, can you say that this is a profit I'm going to earn without revenue? No. So C is also not. The D is production plan. If I produce more goods, means I'm not selling all those goods, no, sir. That's what. So what is option, sir? Sales forecast. E. A company uses a comprehensive planning and budgeting system. The proper order for the company to prepare certain budget schedules would be. So what is telling? Comprehensive planning and budgeting system means there is an organizational structure for their each and everything. There is a certain rules and regulations to be followed while preparing planning and budgeting system. Now the proper order for the company to prepare certain budget schedules would be. So for this type of organizations, what is the proper plan we need to implement? Cost of goods sold, balance sheet, income statement and statement of cash flows. This is the first option. Second, income statement, balance sheet, statement of cash flows and statement and cost of goods sold. Next, statement of cash flows, cost of goods sold, income statement and balance sheet. Next, cost of goods sold, income statement, balance sheet and statement of cash flows.
The D option, not.
Correct. The first and foremost thing we'll be doing is manufacturing, non-manufacturing, trading, right? After that, P&L, right? After that, balance sheet, right? After that, cash flow statements. Budget methodologies. Which one of the following is not an advantage of activity-based budgeting? Activity-based budgeting, sir, if you remember. What we only consider the activities, I mean the resources what we have used in the activities. Okay. Now, better identification of resource needs. Let's see. Linking of cost to outputs. No, sir. You can, sir. But whether the output price, see, cost, you are linking the cost to the outputs, which is fine. But can you perfectly know because of this is a cost I have incurred? No. Indirect overhead, indirect expenditures or overheads. Can you perfectly say that this is the reason why I have incurred this cost? No. So B is not an option. Linking of cost to outputs, you can't. Next, identification of budgetary slack. Sir, when there is a slack or when there is no proper budget, what you have prepared, it is not that much effective. Then how come? No. Next, reduction of planning uncertainty. Means what, sir? Reduction of planning uncertainty. So A or D, which one is correct, sir?
D, sir, because activity-based budgeting does not claim to reduce planning uncertainty,
Perfect.
but it claims to have better identification of the resources.
Correct. Correct. Better identification of
The resource needs.
perfect. The resources what you are using, it's what it is. That's it. So out of these three, which one is correct, sir? He told not no, sir. If it is not here, then what is the option? A. He told not no. Then what is the option? Understood? Next. The use of master budget throughout the year as a constant comparison with actual result signifies that the master budget is also a flexible budget, capital budget, zero-based budget, static budget. Now, he told constant comparison. That means there is a continuity. With what? The actuals. Okay. Now, what is zero-based budget, sir?
So you need to justify each and every expense and cost.
Capital budget, long-term budgeting, right? Next, flexible budget, we can change as per the situations. Static budget,
Can't change. It's not dynamic.
change. So he told us a here constant comparison, no, sir. That means static only, no? It is fixed, no, sir? Okay, what is the option then?
D.
Static budget.
Correct. Next. An advantage of incremental budgeting when compared with zero-based budgeting is that incremental budgeting, okay, he's comparing the incremental budgeting and zero-based budgeting. Now, zero-based budgeting is what, sir? There will be no continuity. Incremental budget is what, sir? Basically, if you increase your production, you need to increase your cost as well. You need to increase the output. You need to analyze that how much return I am getting because of this increment of cost. Understood? Let's see. Encourages adopting new projects quickly. No. Why? Sir, that's what. Here, considering the new projects is not a problem, sir. The return on new projects is what problems. Understood? So, sir, if there is no incremental budget also, you can do new projects. But what matters here? The return. Okay, next. Accepts the existing base as being satisfactory. Let's hold this point. Next, eliminates functions and duties that have outlived their usefulness. Means what, sir? Functions and duties. Let's say, for example, there is a missionary and there is a group of labor where they're doing efficient work and marvelous work. Will you be eliminating those, sir, for incremental? No, you'll be using them. Understood? So that's what, sir. Eliminates functions and duties that have outlived their usefulness. Now they are not not that much efficient. That doesn't mean that you are not considering them. No, that's what. So that's not the option. Next, eliminates the need to review all functions periodically to obtain optimum use of resources. Means what, sir? Either it may be A or D, sorry, B or D as per me. Let's see. Eliminates the need to review all functions periodically. Sir, does incremental budget says this is the best thing you have done? No, the variance analysis says that. Budgets will never say so. So giving a review is the function of variance, not budgets. Okay, so functions to obtain optimum use of resources. Because you have used more resources, that doesn't mean your production was good, sir. But that doesn't mean your revenue is great. Understood? That's what. So which one is correct, sir? Accepts the existing base as being satisfactory. Sir, increment means you have earned extra. Basically, it's a marginal, sir. Okay, the additional output or additional input. Now, when you will be going for an additional thing, that's what, sir. You had 2 idlis. Okay, and you want another one. Means you liked these 2 idlis, no, sir. That's what. So accepts the existing base as being satisfactory. When you get satisfied by the present situation, then only you are showing interest for the marginal or increment. Understood? The type of budget that is available on continuous basis for a specified further period by adding a month, quarter, or year in the future as the month. Sir, he told in the future as the month, quarter, or year just ended is dropped. You have done the budget for month. You have done the budget for next month, like that you have done, sir. And after 1 year, again you are repeating the process. After 1 year, again you are repeating the process with the values what you got from the previous budgets. Now, what this type of budgets is called? The first one is rolling budget. The second one is Kaizen budget. The third one is activity based budget. The fourth one is flexible budget. Activity based, no. Kaizen, what, sir? Reduce the wastages. Flexible is what, sir? You can change the budget, but it's telling it is a continuous process. Then what is the correct option?
Rolling budget.
Clear?
Yes.
Ethics and budgeting. Healthful Foods Incorporation, a manufacturer of breakfast cereals and snack bars, has experienced several years of steady growth while maintaining a relatively low level of debt. Okay, so sir, you do one thing, just to go through the question, and I will start the question in 5 minutes. Just to go through the questions. Okay.
Okay.
Answer. Now let's see. Healthful Foods, a manufacturer of breakfast cereals and snack bars, has experienced several years of steady growth while maintaining a relatively low level of debt. The board of directors has adopted a long-term strategy to maximize the value of shareholders' investment. To achieve this goal, the board of directors established the following 5-year financial objectives. Let's see. Increase sales by 12% per year. Okay. Increase income before taxes by 15% per year. Increase dividends by 12% per year. Maintain long-term debt at a maximum 16% of assets. Okay. These are the things they want to do in upcoming 5 years. Now, these financial objectives have been attained for the past 3 years. They have already started, sir. At the beginning of last year, the president, Andrea Donis, added a 5th financial objective of maintaining variable costs of manufacturing at a maximum of 70% of sales. And this goal was attained last year. Okay, so he had a financial objective, that is what, sir? Manufacturing from the through manufacturing, they want to increase 70% of sales, which they have already achieved. Now, healthful foods is to be directed toward attaining these goals for the forthcoming year. The difficult task with the economy in a recession. This is an external factor. Okay. Now, last year there is no recession, sir. This year there is recession. Now, in addition, the increased demand for the healthy foods has driven up the price of ingredients significantly faster than the rate of inflation. That means what, sir? That means what is telling? There is a more demand for healthful goods. Okay, so what they did, the demand has increased. As taken this as a chance, they have increased the price as well. And because the rate of inflation is effective. Okay, now John Winslow, cost accountant at Healthful Foods, has responsibility for preparation of profit plan for the next year. He needs to make a profit plan for the next year. Winslow assured Donis that he could present a budget that achieved all of the financial objectives. He had assured, sir. Now, Winslow believed that he could overestimate the ending inventory and reclassify fruit and grain inspection costs at administrative rather than manufacturing costs to attain the desired objective. So what is telling? Basically, he had thought that the inventory would be high. Okay, because of what? The cost of grains and the cost of the raw material is high. Okay, now presented on the next page at the statement of year 5. Let's see. Healthful Foods income statement, year 5, year 6, actual budget. Now, sales, variable costs given, manufacturing, selling, contribution margin, fixed costs, everything was given. So income before taxes was 1,05,000, 1,20,750. This is a financial position given. Fine. Next. The company paid dividends of 27720, 27,720 in year 5, and the expected tax rate for the year 6 is 34%. Now, describe the relationship between the strategic plan and budgeting. Now, sir, here it is very simple. What? Strategic plan is nothing but it concentrates only on the future. It always concentrate in the long-term goals. Okay, why it is called strategic plan? No, sir. Here the plan is 5 years. Yes, it is a strategic plan. And what is budget? Budget is what you will be doing for this year, next year, strategic, operational, tactical, every time, right? That's what. So describe the relation between strategic plan and budgeting is that's the same thing. Next. But remember one thing, sir. The first and foremost thing, what we will be considering in strategic plan, sir, he told strategic plan. If it is a normal plan, then we need to think. Strategic plan and budget is what, sir? Time consideration. And the second one is strategic plan. That means the target once fixed will not be changed. But budgets, we will be changing based on the situation. Understood? So changes. These two are the things. That is the first question. Question number 2. Determine whether Winslow budget attains each of the 5 financial objectives identified in the scenario. Present calculations that support your conclusions for each objective. Now we need to calculate. Let's find out. He told, now let's find out, sir. Let's find the objective. What it given? No, increase the sale by 12% per year. Now, how to calculate, sir? If you want to find the variance, we need to find the difference first, right? Yes. How to find out? And we need to find the percentage. Whether we have reached that percentage or not. How, sir? Simple. 9,47,750 minus 8,50,000. How much, sir?
96,250. I think.
96,250 divided by 8,50,000, sir. Why? That's what, sir. Your marks divided by total marks gives you the percentage, right? So this difference is telling you the percentage. Simple. So how much, sir? 8,50,000. How much?
11.5%, sir. So it's not attained.
11.5%. So the target is 12%, but you have attained 11.5%. So have you attained, sir?
No.
Next. The second one is increase income before taxes is 15% per year. Now, had he given the values? Yes. Where? The same thing. 1,20,750 minus 1,05,000. How much?
It has been attained, sir.
Sorry?
It has been attained, sir. 1,20,750.
Yes, correct.
That's been attained.
Yes. So 1,20,750 minus 1,05,000 gives you how much?
15,750.
14 to 15. Sorry.
14 or 15?
15, sir.
Yeah, 15.
15,750.
Divided by 1,05,000. How much?
This is 15%.
Yeah, we have attained this.
Or directly, if you just want to check, you can just, you're not supposed to do this, but just if you want to check quickly, you could just add 15% to one,
True.
105,000. Yeah,
The same
105,000.
thing. True. Correct. No, but he told elaborate, no.
Yeah, elaborate. Yeah,
So we need to do.
you have to show the percentage also.
Yes. Next. The next one, what he told, sir. Increase dividends by 12% and maintain long-term debt at a maximum 16% of assets. Wanna try?
Yes, sir.
Tell me whether they have attained or not.
Sir, also the last objective they mentioned in the paragraph, the variable cost should be at least 70% of the sales. That
Yes. We'll coming step by step.
Okay.
Yeah. Sir, I guess for this dividends and the net income, all those things you will be learning in financial statement analysis, the formula, all those things. Okay. Do you know formula or shall I tell you, sir? See, basically here we need to conclude the tax rate as well. Why? Because if there is a dividend, you are going to pay, you are paying from the net income, what you have earned. Yes. And you are also given the dividend amount that what we are paying. Okay. That's what. So are you using the formula or any other method?
Yes, sir. Same formula only, sir. Same one.
It told 34% of tax, no. So we need to consider 34%. Okay. What is the net income I have earned? 1,20,750
Yes, sir.
into 0.66. Done, sir?
Yes, sir. I just I didn't see that that dollars in thousands. I didn't see. So the difference just came to $50. So I was confused. Like, how did they get 50,000?
Okay.
Yeah, I got it.
You can read it out.
No, sir.
Yeah, fine. Next, done with long-term debt. Same thing, sir. 308
Sir,
minus
but this
3.
formula we will learn again in another unit, no, sir.
Yes, external financial statement analysis.
Okay, I think Suraj sir will take that, sir. Correct?
Yes. Financial
Okay.
statement analysis. You'll be using this. Yeah. Sir, long-term debt. When you want to calculate the long-term debt, always remember one thing. What? Make sure you are comparing your debt amount with the total. Why? Because this includes this, no, sir. That means you will be knowing the percentage. Okay. If 2050, we'll be calculating like this in C and even in CMA also, sir. If 2050 is 100, what is 308? Cross multiplication. Okay. Next. Variable done, sir. Sir, how much he had given? How much, how to find out the variable?
So just you have to multiply sales by 70, and then you have to check if you want to verify, then that you can do. And then if you want to express in percentage, subtract it and divide it by sales, and then you have the percentage. But I don't think in year 5, once again, sir.
No. And one more, correct, you're correct. And one more thing, he told the variable costs as what, sir? How much? 70% no, of sales.
Of sales.
So 9,47,750 into 70% gives you the variable cost.
Yes, sir. 663,425.
Perfect. Now we need to find the difference, no?
Yes, sir. Yes, sir. That's one.
So we need to compare with the actual. So how much is this thing, sir? The selling and administration, sorry, the manufacturing gives you 5,74,725, right?
Yes, sir.
Divided by 9,47,750. You
So
will
the
be
total
finding out the
variable cost
percentage.
you have to add up, sir.
Sorry?
You have to add up that and selling administration, because that also is involved in variable cost.
No. Selling and administration, sir. Administration is like employee salary. No, it is fixed.
But they have given in selling. They've given selling administration in variable and in fixed also, sir.
Did he told that?
It's given in the statement, sir, in the income statement.
Yeah, I'm looking. Variable cost, manufacturing, maximum 70% of sales. In this statement, financial objective of maintaining variable cost of manufacturing at a maximum 70% of sales. He only told about maximum manufacturing, right?
But in the income statement they've given, is that wrong, sir? Because they've given variable cost, they've given manufacturing and selling and administrative. And again, they've added selling and administrative and fixed cost also.
So then we can't consider selling and administrative because that's what, sir. Salaries, everything is a fixed, no.
Yeah, it is. Yeah.
You can't consider, right? So what is the percentage, sir? You got the maximum. Maximum of 70 means less than or 70, no, sir. So if it increases, then they can't afford. He told less than 70. In simple words.
So attained, sir. Attained. It is less than 70, so attained.
Okay. So how much you got the percentage?
60.6.
Okay, then it was attained.